Hello and welcome to Wyckoff Trading Academy. Let me bring up my chart. So I hope everyone is doing good and doing good in their business and doing good there in life. So today's session is basically uh, a continuation of yesterday's session, which would be a part two, wherein what I would be doing is I would be trying to, or I would be explaining what things I have developed based on Wyckoff methodology and what is the true essence of Wyckoffian analysis or Wyckoff analysis. So, like I'm addressing to my student who are watching this video or to the traders who have bought the system from from me and based on which are purely based on Wyckoff, certain indicators or certain tool set which I have developed based on whatever I have understanding, like whatever understanding I had about Wyckoff and his work extensively into identifying the market turning points in terms of identifying the foot indicators which I have developed over a period of time and which are like based on Wyckoff work. This is like WTA multiple time frame uh, price and volume indicator. It is basically derived from the idea of like David came up with an idea uh, based on the study which he had uh, on Wyckoff, Richard D. Wyckoff's work of price, demand and supply, price and volume, which we normally call it in our terms, which is basically demand and supply evaluation. And this demand and supply, in a nutshell, if anybody wants to understand what David Weiss his Weiss wave was, his Weiss wave was intended to just identify the waves in terms of price progression and in terms of volume. So when what he did is he collaborated this both things and he came up with a graphical representation that too in terms of histogram, which is normally visible as pyramids or you can say triangles. So it is all like piling up of cumulative it is a representing cumulative volume. So this is what his intention was behind creating to assess the price in terms of volume and applying Wyckoff principle into it, whether shortening of thrust or change of behavior or a normal low volume pullback. So what uh, this was the basic idea behind this thing. So I'll not go into detail of like what this Weiss wave comprises of and how is the calculation made and all this stuff because that is much more theoretical. We are not. I think most of the traders are interested in learning the logic, not rather what works behind it, so that um, you people are not going to code yourself. You people are going to apply it. If somebody wants to code by himself, then he can apply the simple logic. If demand is greater than supply, prices will rise. If supply is greater than demand, prices will fall. Simple. So in yesterday's video, I have discussed about this thing. So now in today's video, in part two, what I'm going to do is I'm going to elaborate first thing first, which I was talking about before David Weiss' work and David Weiss' contribution. Unlike any other, like I've been through many various methods and various things because I was also since more than 15 years or more than 10 years or more than 12 years or 17 years, whatever you want to like, uh, based on my experience, what I've seen in the market is what how like the main objective behind doing all these activities and all this making all these indicators. By the way, this all indicators I have programmed by myself because first thing I was acquainted with what I learned. I learned uh, various methods because unlike any trader, I was also of same. I came into the market with same intention as to make profit when price rise and simultaneously take profit when the price fall. But again, when it comes to Sharia, we only trade when the price rises, or there are many other factors. So I hope this is a generalistic video, or people audience would be general. So if anybody who wants to dive into what Sharia trading is, ping me or drop me a message on my WhatsApp number, which would be given in the description. So I'll get into you can inquire about what Sharia trading now also. But in a generalistic view, like normally people get into the intention. Normally traders get into trading just to make money. Either if the prices are going to rise, you would buy, or if the prices are going to fall, you would short sell. This is the common practice wherein you make the profit. So unlike any trader, I was also having the same notion and same intention behind getting into trading. And I worked on various indicators, various technical tools, and worked with various methodologies, GAN and Fibonacci and other things, and Elliott wave and other things. But which thing? But the thing is, like, you have many tools at your disposal. For example, if you have many methods, for example, uh, you would have to be consistent with one method for over a period of time, like for say a year or two or 5 or 10 years, so that you would come to know, or you would come to a conclusion that this method is going giving me consistent result. But having said that, there is one another analogy which goes with this one. If you're waiting for like say for 5 years, the thing should also resonate to you when you're working on in during this 5 years on a shorter time frame, on the shorter intervals. You should be able to make money. I'm not here to quantify what amount of money. I'm just here to I'm just here to trying to. I'm just here to. I'm just here trying to explain you. You should be able to make consistent money on lower short intervals to make a what you can say foundation for your coming 5 years. So in that way, you would be consistent in making profit, and after 5 years, you would be able to say to yourself, and or you would be in a position to say or conclude that what method, what tools and what techniques I'm using is generating profit for me. Because for me, trading is this is like I'm into trading to make my livelihood. So this is not my part-time kind of thing. This is not my uh, like a hobby, or it is not something which I do just on a random basis. I'm a consistent trader. I believe in trade, bringing meal on my table through trading. So what I have gained in in my quest of like for say 15, 16 or 70 years, 17 years, I don't remember exactly when I began, but to say it is 15, 16 years. So over the period of time, I have understood that Wyckoff has a potential, or Richard D. Wyckoff's work, or his theories, or his method has a potential to give you consistent result, because it is consistent. It was consistent. Like the person which we are talking about, Richard D. Wyckoff, he was in like 100 years from now, 110 years from now. So if this thing it worked in his time, it worked in 50s, it works in 60s, it works in 90s, and it is working in 2020. So there is nothing which we can say that it has a like saturation period, or this kind of thing, but rather what made this thing stand out and what makes this thing work is the simple analysis, or simple. I've simplified it in a simpler manner so that any person who is following, or who is looking forward to making money, and who has come to my video or watching my video, or would be watching my video in future. So you should be able to understand the simple law, simple thing which Richard D. Wyckoff has tried to pass on to us in his studies or through his work is simple. Wyckoff analysis is simply based on the functioning of demand and supply in the market. So the people who have been through my training or still were going through my training or about to take my training. So everybody, like especially to the people who have already taken my training. So to them, I would like to say is that, or to the people who are completely new, what this Richard D. Wyckoff work is. Richard D. Wyckoff work is completely related to demand and supply. Because if there is demand in certain thing, price would rise. And if there is supply, and if there is existence of supply or demand, supply is greater than demand, then price will fall. This is the simplest way to explain what Wyckoff work revolves around. No, having said that, he came up with many and different kind of things, and some people who take on or who took his work further, they added up things into based on what you can say availability and technological advancement and other things, and based on their observations, they have added certain thing into it. But the true essence and but the basic idea of ICOP was is to identify demand and identify supply. If there is demand, go for a buy. If there is supply, go for a sell. So, keeping this thing in mind, what I did is I don't know anybody else apart from like I would not like to take the name, but there was some trade guide kind of thing wherein they came up with VSA volume spread analysis or volume whatever I think they call it as volume spread analysis. And later on, people came up with smart money concept, and later on, people came up with ICT and other kind of thing. But the whole idea behind that thing is, I believe that they all backtrack their work or they all have taken the inspiration from Wyckoff. So now there are different school of thought in the market. There are different school of thought and school like methods which people follow uh, in today's trading. For for example, you can say like people follow WDGAN method, people follow Elliott wave, people follow ICT, people follow smart money. But for me, smart money and ICT are all like I've been through their conceptual understand what I understood about their concept is like they have something which is revolving around demand and supply. So I encourage everyone who is watching this video to at least have a understanding, at least if you are following any method, any tools and technique, just give a chance to Wyckoff so that I'm not telling you to buy things from me. It's your choice whether you want to buy it. It will not make any difference in my trading, but you have tools what for people who are aspiring to learn Wyckoff and people who are seriously wanting to make their livelihood out of trading, because trading is a business of probability. It is a business of probability. It is a business of staying uh, in the market for longer duration, and the probability and your stint in the market would in for if you want to increase it for longer duration depends upon how you what probabilities do you have in your favor. So I think based on my experience, what I have seen in the market so far, if you people who are observing my videos and who are following along my YouTube channel, or if you are following along on whatever uh, forums I normally post my charts or my analysis, it's like 80 to 90% of the time I'm able to uh, assess the market in a right way. That is the reason because there are two things. One thing is forecasting, one thing is reaction to the market. First thing for a trader is to forecast whether the prices are going to go upwards or downwards. If you see prices are going to be going upward or rise, so you don't know, first you have to uh, assess as to what should be your reaction to if price goes in your favor. By reaction means whether you want to get into a trade or not, whether you want to buy or sell, whether you want to open an order or not. This is what a reaction would normally refer to. when it comes to Wyckoff trading or Wyckoff trading with Wyckoff methodology. So, or any methodology to per se. So, having said that, forecasting something wherein we try to see whether the market has a potential to go upward or downward. And after that assessment, what role the trader you have to play is to actively participate in that forecasting which you have done. So now people normally very traders. I'm going to make this into a like series of videos so that my student as well as people who had bought indicators from me or people who are just watching this video just to get knowledge out of watching this video. So I would make a series on this thing, and this is the second part in my series. So this series is purely intended to help you people understand how Wyckoff would change your entire way of trading if you follow the basic or if you follow the true essence of Wyckoff, Richard D. Wyckoff work. So having said that, uh, as I mentioned, I was talking about forecasting of price and then either upwards or downwards. And second is how would your reaction? So initially, many people they come up with many traders, unlike any normal trader, they would come up with a notion that I would be like I would like to focus the market which where the price goes and whatnot. But the main intention of a trader should be whether if price is rising and if price is falling, what should be my response to it? Because it is your response which will decide or which it is an action which would lead you to make money or lose money. So I rather I rather believe in what you can say responding to what the market is presenting, whether it is upward movement or downward movement, rather than forecasting. So now this responsive kind of analogy is something which resonates with Wyckoff also. What Wyckoff did is simple in a simplified manner in two bullet points. But rather, before going into this two bullet points, these are the indicators which I have made, and many people have bought this and they are doing well, I guess. And I have made many more indicators, but uh, these are the indicators which I have made, which I'm focusing based on Wyckoff. And there are other tools as well which are also based on Wyckoff, but these are the most commonly traded used tools for trading Wyckoff, like details of this thing. If anybody wants any detailed video about this thing, then please drop me a message, or you can just comment below on this YouTube channel, YouTube video below this YouTube video. If you want any detailed video, then I'll give you a detailed analysis or detailed walkthrough on how this thing is made. So there is an effort versus result, which is a law of Wyckoff, which Wyckoff came up with. If there is a effort, then there should be a result equal or in the same particular direction. Second thing, this was a vice faith. So I made up some comprehensive addition to it. Is that what automatic basis is like if you're switching from time frame to time frame. Like for example, we are observing XAUSD, that is gold spot. And if you're on a 5 minute and if all of a sudden you enter it, it comes with automatic adjustment. Either you're trading in stocks, either Indian, Asian, American, European, any German, any stock, or even Chinese stock or Malaysian or Indonesian stock. You don't have to do any manual adjustment whatsoever to make the assess the wave size. So having said expensive and very um, user-friendly addition, because many a times if your trader is dealing with 10 stocks or 10 commodities or 10 scripts or 10 instruments, so every now and then when he's switching from time frame to time frame, he has to go in and out and move in and out from one wave setting to another wave setting. I think the people who are using Wisewave, they might understand this thing. And this is a very normal, like, this is a basic problem which everyone faces. So I have dealt with it in a such a way that if you are switching from one instrument to another instrument, or either one time frame to another time frame, or another, like, you don't have to change it. The automatic market will like this, it will automatically for you to trade in. So this is a very user friendly. So I'll remove this thing. And again, this is effort versus result. This denotes only price. This is not, it doesn't have any component of uh, volume in it, though the below price and volume had component of volume. So I'll remove this one also. So my top and this one, Wyckoff tape reading toolkit version 155. This is something uh, which I have developed, keeping in mind the tool tape reading way or tape reading which Wyckoff used to do. So based on his work, based on his understanding of his work, I have developed this thing so that you should be able to, like, the main essence of tape reading toolkit version 155 is simple. If market is going upwards, then demand should be greater than supply. If market is going downwards, then supply should be greater than demand. And how would you come to a conclusion whether the demand is greater than supply or supply is greater than demand? It should reflect in price. You're getting this point? It is as simple as that. Anything, anyone, because if people are using bar, if your people are using candle, if people are using any charting method or charting style, they should be in a position to understand which side has a demand. Like for green and with green triangle, it suggests demand. For red with blue triangle, it suggests supply. Simple. So it is as simple as that. So this was one of the tools which I always most of my many of my, like, all of my students, they use this tool. After this thing, I have come up with this kind of a tool which is called as which is something like Sharia trading system. Uh, so the main I'm just explaining what how Wyckoff work can be applied in today's scenario. So if you just follow this thing, if you understand, or if you go through these 2 points, or if we go through these 2 points, like Wyckoff analysis simplified. In this thing, you would see there is a low volume, there is a high volume. What low volume would result in? It will first of all show either there is lack of supply or lack of demand, depending upon where the low volume is appearing. And after that, it will show you price progression. Sorry for my spelling mistake. I think it is a autofill kind of a thing. So lack of supply or demand or price progression either upwards or either downwards. So sometimes if price is going upward and we see a lack of supply over here, this would result in either there is demand is getting weaker, and what we are about to see is like supply of price would start falling. Second, this is the first interpretation. Second interpretation, based on what I have understood about regarding Wyckoff, is, or based on his studies, is that if there is lack of supply, this would also mean, or like for example, if there is lack of demand, this is pertaining to demand, and this is something which is demand. And if there is lack of supply, this means the exhaustion period is ended, and what we are about to see is price progression to the upward side. And same goes with when the things are uh, beer prices are coming down, and if you see uh, a low supply, that means this downtrend has ended, and then we are going to see price progression. Or either ways, if price is churning, if it is going sideways, and if we see low demand over here, then you can see, or what you can observe in future movement would be a downward price progression. This is something very, very, very simple in nature, very precise. And if you are able to identify this thing, if you are able to identify this movement, you have more to gain but little to lose. So now this is about low volume. What does high volume suggest? High volume is something which is saying stopping move or beginning of a new move. Again, I made a mistake over here, I guess. So no problem. Please bear with my spelling. So having said that, if there is a high volume and if we are approaching high and there is all of a sudden high volume appearing over here, so it would result in two things. Either there would be a supply coming into the market, or there would be a hidden buy. Same goes with when we are coming down, and if there is a high volume taking place over here. Either this is a buying coming in, or either there is hidden selling. So either it will result in buying that would take the market upward, or either it is hidden selling. So how you are going to identify these things, whether this thing is happening? So now many people came up with the ideas of different things and all the stuff, like ICT, smart money, VSA. Uh, I appreciate all the work done by all these people who have come up with these ideas, because eventually it is resulting and it is helping traders to earn money. So what view on what thing I have developed which can facilitate a trading, which can facilitate the application of Wyckoff methodology into a normal trading, or like which will resonate with normal trader. Just give me a minute. So I have developed this system. So it comes as I mentioned earlier. It has the Wyckoff low volume pullback, Wyckoff high volume pullback. So now if I have to say, like, we are observing XAUSD. Now I'm talking about Sharia, and I'm talking about Sharia trading system, and I'm using XAUSD because it is XAUSD. I'm not using it in terms of any particular what do you can say, because the main reason for using XAUSD is like it is gold, and gold is normally essential metal which is normally observed by every trader who's trading stock, or who's trading futures, who's trading anything or any other financial instrument, because it affects, rather I should say it should have been oil, but for this particular example I'm using gold. Whether it can like rather it can apply on any like as I'm being Indian, I normally refer to Nifty for trading any stock trading decision. So I'll move back to XAUSD. So it works on any instrument or any financial market. So which is fairly and freely traded. So coming back to this point, like here I have applied high volume. So if I want to explain, for example, like if I apply on my version 155, because many of my students would be comparing this thing with version 155 of tape reading toolkit. So if you see over here, you can see the first volume, high volume was, I'll draw vertical lines rather than this, so that you would we all would be like in a better position to understand which particular bar I'm referring to. This bar, this bar, and this particular bar. Let me visibility. Let me change the color to black rather than this one. So I get lots of people asking, like you do all the settings on like on the live chat rather like on a random day, or you are not that much well prepared, well planned, because my friend, money is made in live market and everything has to be spontaneous. So I've been into this market like 15, 16 years. So and try to make things clearer, try to explain things in my videos uh, spontaneously. So because you cannot plan things in real time real life market, you have certain things which are within your control, but you can like for most of the part you have to be a spontaneous reactive kind of a trader. So for example, like coming back to a point, this is referring to high volume. This all vertical lines are referring to high volume. So now what this thing has, it shows you the overall trend picture. First thing first, what David Weiss has developed in like by way of his Weiss wave, and it shows you wave volume. But this tool of mine, it will show you, or it will give you an insight. Oh, this entire move, there was no whatsoever kind of high volume supply. Here we are talking about when there is a green ribbon and red line, that means it is corresponding, or it is referring to high volume supply. When there is red ribbon and there is green line, that is referring to high volume demand. So here it is referring, if it is green ribbon, and if it is telling, it is plotting a red line, a red portion in it that refers to high volume supply. So if the high volume supply is there over here, so what we are expecting either, as per the explanation shown over here, the move is about to remove, or there would be a new beginning of the move. So if you see over here what happened, this is a live chart of gold. You can see price is moving. So on from 30th October, we had seen supply coming in. Why supply? Because the ribbon is green and the line is red. So supply came in, and what I was like, if there is supply or if there is heavy volume coming in on lower price projection and there is continuation of price downwards, what I'm expecting to see cessation of upward move and then continuation or then beginning of a downward move, and that is what happened over here. So, and apart from this, I like the people who have been through my training and all this, or doing my advanced course, they would come to know what things other apart from this I look into for this particular area to define it as a turning point. It might be a turning point, it might be a temporary cessation of upward movement, and then it price would go upwards. So, having said that, this is what a heavy volume would look like. Now, if I see, if you want to see what, because I can show you what has happened in the past, but I would rather love to explain it to you in real life scenario. So, like for example, what has happened? Supply came in, there was a shortening of thrust, or you can say price progression stopped, and market turned its direction, and it resulted in downward progression of price. So, if that is the case, then we want to see if there was heavy volume, what we would see on low volume. So if I apply Wyckoff low volume pullback, now things would change. Every upward movement would show us that as we are making higher progress, there is low volume. So now this low volume correspond to this price or bar. This volume correspond to this price bar. This volume correspond to this price or either this price bar. I would say this far price bar. This low volume corresponds to this price bar because once the bar is complete, it, it plots. Or either ways, if you apply it to same particular bar, you can see. So this is the tricky part. Now you can see there is demand if this particular low volume is corresponding to this particular bar. This means I was talking about hidden buying and hidden supply. Hidden supply. That means people are seeing, people are observing that this price has risen from this particular low and it has closed form and it made a higher progress. So your normally traders would be in anticipation that prices are going to go up first, but rather it turned down from that particular point. So this low volume, like for example, I explain it in low volume. So if there is a low volume over here, that means there is lack of supply, lack of demand, because there is no whatsoever continuation towards upward side, and price came back. So this is how you, if you follow along with this tool, give it a try, and it will change this. It will give you. It will be a completely. What you can say? It will change the way you trade. When you know if market is going upwards, what characteristics, what points I should look out for, and what should I take into consideration for being into in a trade or getting into a trade, or either exiting out of a trade, either ways, or where to trail my stop loss, trail my profit. So for all these things, you require the insight of the market, whether the market is going to go upwards. And there is no better tool compared to price and volume. I'm not talking about my tool. If you want, you can get it. If you don't want, it's no problem. But the thing is, like, I'm here just acting as a whistleblower that work on Richard D. Wyckoff principle. I try to understand it. try to learn from like whichever sources are at your disposal within your limits, and try to get the tools. But I have developed these tools which would facilitate the understanding of, or which would facilitate, or which would simplify the Wyckoff analogy or Wyckoff analysis in a very logical and a simpler way, so that any person or who's trading a day, who's trading for on 5 minutes, who's trading on 15 minutes, 10 minutes, 30 minutes, he would be in a position to trade. Like for example, I said earlier, when there is a red ribbon, the green patch would refer to as a either low volume or high volume pullback. In this case, we had already set it to low volume. So remember what I mentioned earlier in the video. If there is low volume pullback on particular price bar or particular price area, that means there would be a price progression or either a cessation of move and then a trend change. Either ways. So this gives you a re-entry point and a trailing point, and more than that, like it will give you a confident, what you can say, it will build your psychology, it will give you confidence that you have certain thing which would help you in analyzing the market in a right context. I don't find anything other apart from these tools which are this much uh, uh, accurate, or you can say which can give you this kind of results. Because I being a Wyckoff trader, I being a Wyckoff student, I would rather love, because I'm into analysis, I'm a technical analyst by profession, but and trader as well. But what I like to see is simple. If there is this thing is happening and this thing is helping us in giving us an insight whether there is a probability of price going downwards or upwards, then it increases the chances of winning the trade and making eventually making good profit. So thanks a lot for watching this video. I'll come up with part three with other indicators. And if you people want Weiss wave and effort versus result kind of analysis, or you want to want my explanation on what David Weiss wave intended and what we can understand and what how we can use it, or uh, what new things which we can learn from that when it comes to application, please you feel free to post any of your comment and watch this video and learn and earn on a consistent basis. Thanks a lot. Thanks a lot for watching the video.